How much single Ann will pay in taxes on her Social Security benefit? All right, so I'm going to update the video I did yesterday. The first time in the whiteboard in the basement, I had done a video. The lighting wasn't great. It wasn't a great video. I made a mistake at the end with standard deduction too, and my guy pointed out, and I hadn't recognized it was a mistake when he pointed out, because look, I take a lot of arrows, man. And when people are like, I don't get you can't help it. Your first thing is to get your shields up and knock away the arrows. In this case, the guy was right. I used a standard deduction of a married couple as opposed to single. So that guy, my fault. I woke up this morning, I took a shower, I said, oh, that's where that guy got. It just hit me like a ton of bricks. So I'm taking the video down. I can't have anything in the ether that makes me look like I'm don't know what I'm talking about. So I deleted that. But it wouldn't have. I'm going to show you right here. It wouldn't have changed much. But anyway, so what we're going to do here is but don't forget, if you want to subscribe, if you want to be on my email list, I send email probably once a week, twice a week sometimes, once a month sometimes, just on occasion. Subscribe to Doobly Doo down there is the very first thing, my email list. I'm not afraid to talk politics, my faith, and just various ranking on climate change, doomsayers and stuff like that. So if you don't like that stuff, don't subscribe. I'm just telling you right now, don't need you here. You can just watch my videos, because subscribing is just click a button. Wow. Subscribe. Wow. But anyway, if you want to follow me on Locals, we go live every Friday at 4 p.m. Eastern time on Locals. So follow me on Locals. That's in the Doobly Doo too as well. All right, so let's go into this. We got single Ann. I'm using Tom. He emailed me this. I'm just going to keep it as Ann because this is my sample. I got Ann's sample. All right, so Tom's getting a pension. Well, Ann's getting a pension of $33,252. The thing, and this is what frustrated me. Another thing too is that Tom had emailed me and he said this guy had done a video that disagreed with me. And the guy's video, that what Tom said is that he said, if you go into the 85th there's basically three brackets of Social Security, which we'll get to here in just a second. Because if you go into the third one, the entirety of your Social Security is taxed at 85%. And I said, there's no way that guy said that. I said, send me the video link. And I watched the video. I said, that's not what the guy said. He didn't say that in the least. I said, don't put words in that guy's mouth. And that guy's video was pretty good. Get Financial Strength or something like that. Joe Rosen? I like him. Didn't have a huge amount of subscribers, but I liked him. He sounds like he's from New Jersey or Boston or something like that. Anyway, it's a good video, man. And I said, no, that's not what he said at all. He goes, in this case, they have their 85% of their Social Security subject to taxation, but in no way did he said, if you go in this threshold, 85% of your Social Security is subject to taxation. Don't put words in people's mouths, my friends. It's bad. Anyway, but this is what Tom. So he emailed me and said this is what his pension is, $33,000. All right, so now what we're going to do is we're going to say Ann here. We're going to use her Social Security. We're going to allow right there. We're going to say she has a Social Security benefit of $3,100 a month. All right, and that's her full retirement age. I think we had her hanging up the boots here. Yeah, she already retired. All right. So what we're gonna do is just gonna be literally just that simple, man. And I don't care about the expense. We don't care about any of that. Right now, we just care about taxation. All right. So what we're gonna do is we're gonna go over to cash flows. Remember, she got her Social Security is $3,100 a month. Her pension is $33,252. So her total income is $70,000, basically $70,500. All right. So now let's go to the 1040. All right. I'm just telling you, man. You're gonna see, you're like, wow, not much in taxes. All right. So let's go to 1040, and we're gonna see her social. Here's her pension, $33,252. Here's her Social Security. So between her pension and her Social Security, she has $70,000 of income. However, only $19,000 of her Social Security is subject to taxation. So half her Social Security is tax-free. All right, so now we take the amount of her Social Security that's subject to taxation, which is half essentially of what she made in Social Security income, the income she can spend. We add it to her pension, and now we get her total AGI of $52,000. We take away her standard deduction of $14,700, and her total taxable income is $38,000. So basically, her taxable income is just a little bit more than half her actual income. And so her taxes here are $4,300 on $70,000 of income, man. And it's crazy. Look at that. 8.3%. I mean, that's her effective tax rate, dudes. You can't shake a stick at that, man. All right, so that's fantastic. We like to see that. I'm looking for Finn. Now we'll keep going into the future. I think we had her. So let me just show you something else here too. This is her effective tax rate, 8.3%. This is her marginal tax rate, 12%. Not much of a difference there. 8.3 is her effective tax rate, 12% is marginal. All right, but let's go back to effective tax rate. Here, her effective tax rate is 11.3%. All right. That simply means for every $10,000 she made in income, she's paying $1,100 in taxes. All right, everybody with me on that? For every $10,000 in income, she's paying $1,100 in taxes. Here, for every $10,000 of income, she paid $830 in taxes. All right, now I use paid in the past tense. The marginal tax rate says how much tax will she pay on her next dollar, but for simplicity, we'll say $10,000. So here, she'll pay her, if she had $10,000 more of income, she'll pay not 8.3% as her effective tax rate, but now she'll pay 12%. So what's that, a 50% increase in her tax? All right, because it's going to go from 8% as her effective tax rate to 12% on the next dollar. Again, we're going to use $10,000 for simplicity. All right. Now, keep that in mind. That's a big deal. So that's pretty close. I mean, believe it or not, that's not that far. 8% effective tax rate, 12% marginal tax bracket. That's not a huge jump. But now we go, is 11%, wasn't it? I think her effective tax rate before was 11%. Yeah, 11%. To 25% now. So now she has a marginal tax bracket of 25%. If she made an extra $10,000, she'd more than double her effective tax rate, because her effective tax rate is 11%. If she made an extra $10,000, she would pay $2,500 in taxation on the extra $10,000 she made, even though her effective tax rate previously to that, the extra $10,000, was only 11.3. So here she should not do any Roth conversions once she's here, because then she's not paying, she's losing the lower effective tax rate and going to something that's more than double what it was previously in terms of taxes paid. I hope that makes sense. All right, so let's keep going to, I want to look at more tax returns. We're going to go to 2030. Here we go. So for some reason she's got some qualified dividends. The reason she has qualified dividends here is because we have her living off, she's not spending enough income and that, whatever. But so let me just show what I'm talking about. So she has more money coming in than going out the door. And that's, let me show what I'm talking about here. All right, so we went to 2030. So she's got, so we got 83,000 coming in from her pension and Social Security. She's only spending 51,000, so she's netting 31,000. It's going back into her brokerage account, which is giving her qualified dividends. Let's not do that. We'll say her. I want to show you what I'm talking about. So here she has, 2030. She had 33,000 of surplus cash. We're just gonna have her spending that, so it doesn't go back into a portfolio. So I just want to show you what the 1040 looks like. If we're gonna go to 2030, right there. And we got 43,000 of Social Security. At this stage, she has $39,000 of a pension. So what's that? Roughly $85,000 of income. Again, a significant amount of her Social Security is not subject to taxation. So she's got 16,000, 17,000 of her Social Security is free from tax. And we go down here. She has, between her taxable Social Security and her pension, her total AGI is $67,000. Which is, what's that, 13,000, 15,000, what does she make, 80, what's her income, 80, 40, 85, that's 18,000 less than her total income, all right. Now we take in her standard deduction, because the Trump tax bill goes away, the standard deductions get reduced, but then she also has a personal exemption, which we call a qualified business income in this model, but in 2026 it'll change back to personal exemptions. So she has $14,000 of exemptions. So $67,000 is AGI minus her $14,000 of exemptions. Her taxable income is $52,000. She pays tax of $7,400 on $84,000 of income. Again, the tax code is very favorable for Social Security. So if we go down to the Social Security right here, it's fantastic, dude. I mean, this is what Right Capital kicks ass. says enter the amount of your Social Security, all your income, 43,000. Actually, what was that? I can't remember. How much is her Social Security again? It was let's go 1040. Was it 43? Okay, her Social Security is 43,000. So just look at this. I mean, literally, I should have just done this to begin with, but I like doing the whiteboard, but here's even better. So here's her Social Security. We take half of her Social Security. We add to her other income, in this case, her pension. So she has between half her Social Security and her pension, 61,514. That's her provisional income. Provisional income is not adjusted for inflation, those sneaky devils. So the first 25,000 is tax-free because we know how it works. The next 9,000 is right here, is half of that goes into her taxable Social Security. All right, so the first 25,000 is tax-free. The next 9,000 is 4,500 of that is subject to taxation. All right, then she has 27,514 that is at the 85% tax rate, and so 85% of that will be subject to taxation. So we simply take that 4,500 plus a 23,387. We add them together, and we get 27,000. Yeah, right there, 887. That is the amount of her Social Security that will be subject to taxation, 27,887. The max you will have is 85% of her Social Security. So it says multiply line 1, her total Social Security, 43,918, by 85%, that's 37,000. Or take line 14, which is how much of her Social Security is subject to taxation when you use the provisional income method, and take the less of the two. In that case, 27,887. So we go back to 1040. And that will flow right here to the taxable Social Security, 27,887, even though she's well within the 85% threshold. So just going back to what Tom thought the other guy said, Tom, you thought wrong. I don't know if you need to listen better. Look, I'm not trying to bash you, but your email was very implying that the other guy had mistaken or I had mistaken. Neither of us had. Just because she went into the 85% threshold does not mean her taxes or her 85% of her Social Security benefits subject to taxation. So, look, there's a lot of bad advice in my business, but I'm going to defend it when the business isn't giving bad advice. And this guy, again, I think his name's Joe Rosen. Actually, let me just bring up his channel real quick. I don't know who this guy is, but I'm going to show you the video. Here's my man Joe Rosen. He gets it spot on, man. Now, the one thing he did do wrong is he said taxable interest only is is part of your provisional income. It's not just taxable interest; it's tax-free interest as well. But anyway, small. I mean, okay, we all make mistakes, but that was a small potatoes thing. But this is actually a pretty good illustration. Anyway, if you watch the video and you think he's I actually like this guy right here, and I actually reply, hey, my man Joe Kuhn, look at that. My man Syed, I can't tell, says Islamic insurance, whole life insurance, is free from the usury rules of Islamic rules, which I thought is pretty interesting. So I said life insurance is not considered usury under Islamic law. I actually think we as Christians need to go back to a more biblical way of looking at usury and following our Muslim brothers and sisters of loaning money to each other without interest. I think that's not a bad idea. Debt is the freaking beast, man. And we shouldn't be watching fellow Christians fall for the beast because of the debt that we are requiring them to pay us back, if that makes sense. There's got to be a jubilee of saying, look, man, we're going to wipe all the debts off. We're just going to start from scratch, and we're going to lend to same group preference like the Jews do, like the Muslims do, the Christians should be doing. Not going to look through the Fed, not going to look for the bank like the Amish do. We're going to lend to each other. We're not going to charge interest. I actually think that's a wonderful thing. And if we can learn that rule from the Muslims about not lending via usury, I think it's a wonderful way to have a regeneration of a moral code. Because it's all financial, man. That's why the Bible talks so much about money. Anyway, I'll put a link in the show notes to Joe's thing here. Let's see what other kind of get financial strength now. Look, all right, good. So he's got 1,000 subscribers, so good for him, man. He's starting to make a little bit of money. I doubt he's making a ton, but can you use your IRA to pay for long-term care? Are you losing purchasing power? Don't know it. All right. So anyway, you can check my man Joe out here. So I don't know who this guy is, but all right. So good. He's got some videos. So good on him. He's not doing enough. Looks like 3 months. Oh, the last one was 3 months ago. Okay. Is he not doing videos anymore? Hmm. Gotta be doing more than that, brother man. Wonder why he stopped. Huh. Wonder why he stopped. Yeah. Anyway, so there you go, man. And I'm gonna do another video tomorrow. And again, I've done these videos. It's probably been 4 years, maybe 4 years, showing you the more Social Security income and the less other income, the better your tax position is. That's freaking awesome. All right, love your thoughts. We'll see you.